Hello and welcome to the week ahead. I'm Brenda Kelly. Well, if this week has been an interesting one in terms of Greek headlines, next week promise a huge amount on the macro calendar, starting on Monday with the US industrial production. Now, clearly the mining sector has weighed very heavily on this particular metric over the last number of years, and we are expecting that to see a small increase, about 0.1% month on month, ahead of the fact that we've seen some very decent retail sales coming out of the US and potentially an upgrade to the first quarter GDP. This does put a lot of momentum behind the US dollar and clearly adds to the speculation that we could see a rate hike at some stage later on this year, however small or symbolic that might be. Sticking with that particular picture, we will have UK inflation coming out on Tuesday, and that dropped into negative territory for the first time in the series history back in April, coming in a decline of 0.1% year on year. Now, there does seem to be a sense of feeling in the market owing to the fact that we're seeing bond yields rising quite rapidly and with a huge degree of volatility, that the deflationary picture might actually be behind us. And of course, some of the data coming out of the UK has been reasonably positive, which has in some ways made some of the major Bank of England hawks actually state we could be looking to normalise rates in the very near future. The expectation and the general consensus is that will not happen until the Fed actually hikes its interest rates, but we could be open to a surprise here. The trade on that one there really is around cable, and of course, while below the 155.70 mark, there does seem to be a downward trend trajectory still in play, but we would watch for any moves up through that particular level, which could then send us a little bit higher, probably towards the 157.15, but for the time being, below that metric, we would be inclined to sell the rallies against the US dollar. And sticking with the UK, on Wednesday we have the MPC Minutes, and of course the UK MPC have kept their policy on hold, and we are widely expected to keep it that way for the time being. The vote has been generally unanimous, given that inflation was, as I said, negative back in April. GDP growth may have slowed a little bit in Q1, but the construction data out today implies that we could see a little bit of a move to the upside there. So perhaps we'll see an interpretation of the recent rise in the bond yields from the MPC, and I think in some ways we could see a certain amount of hawkishness come out of that particular meeting. We also have the final number from the EMU HICP. That has also continued its gradual up move in May, rising 0.3% year on year from 0% in April. The euro is still a very viable currency, despite the fact that we have seen a lot of dovish language even from Angela Merkel herself. But while below the 113.50 level against the US dollar, we're still inclined to sell the rallies. And of course, with the Greek headlines still very much in the mix, we can expect to see a great deal of volatility. Any moves through 113.50 will target the 114 in very quick succession, and any moves through there, particularly on a daily close, would put the trajectory behind the euro against the US dollar. Whether or not the trigger will be a Greek exit or a Greek remaining within the eurozone is anyone's guess for the time being. And then the big one happens that evening. We have the FOMC decision and economic projections in the Wednesday evening at around 7 o'clock in the evening. And we're expecting that they will keep their target rate at hold between the 0.0% and 0.25%. But given the fact that we have seen some fairly decent macro data coming out of the US, we could see a more upbeat tone from the Yellen press conference that takes place immediately after that actual decision. So we will probably hear that a federal funds rate hike will be appropriate later on this year, and the markets are pretty much pricing one in, about 70% probability for a wage hike in the autumn of this year. And for the time being, the momentum will remain behind the US dollar unless, of course, the data changes dramatically. Thursday, the big one really will be the UK retail sales. They were very strong in April, growing by 1.3% month on month. There was a very big bounce back from a fairly weak reading in May. And it's driven, of course, by the growth in textiles and, of course, the pullback in energy prices as well. So we will probably see some improvements in consumer confidence, and in some respects, depending on what has happened on the Wednesday before in relation to the Federal Reserve, we could expect to see a pop higher on a beating of these expectations. The total expectation is for a rise of 0.2% on the month. Anything higher than this could see a little bit of a bounce in the pound, particularly against the euro, where it has really driven much lower over the last number of weeks. And you do question whether or not this move can be sustained due to the fundamentals in both the eurozone and, of course, the UK as well. Finally, for me, Friday, I think Bank of Japan and the policy announcement is going to be the main thing there. Clearly, we've seen a huge, big, massive move in the dollar yen over the last number of weeks, breaking out of that 122 resistance and heading towards that 125.50, 60 level. Certainly, some of the rhetoric coming from Kuroda was around the weakness of the yen and whether or not it could be sustained. And we have seen a pullback on that. It is expected that monetary policy will remain on hold, but the fundamentals remain firmly on the US dollar side, and you would expect that any pullbacks will more than likely be bought. Key support around 123.50 with the 122 breakout zone also acting a very basic support there. We can probably expect to see, if we break through 125.50, a 128 metric in the very short term.